The credit score represents a consumer risk at a particular point of time, and it serves as an indicator likely of how consumer repay his debt and the probability of them going into default. So the credit score is calculated using the past credit information to predict their future repayment behavior. It ranges from 1,000 to 2,000, and it's tagged to a risk grade from AA to HH. So AA actually represents the lowest probability of consumer going to default, and HH represents the highest probability that consumer will be defaulting. Credit score are included in your credit report, so consumer can either purchase the credit report at Credit Bureau Singapore office. They can also do it via online using their SingPass or at any of our SingPost branch in Singapore. Consumers are also eligible to obtain their complimentary credit report from CBS within 30 days after their credit application has been approved or rejected. So with this letter, they can present to our staff at CBS office to redeem their free credit report. So alternatively, they can also do it online via SingPass.
A credit score gives lenders an idea of your financial health.
In general, your credit score, the lower perceived default rate risk you will be to all the lenders. However, different lenders have varying risk appetite and threshold, and they use consideration other than consumer credit score who has extended credit facility to. For instance, credit lenders may also consider other factors like their income or their general background or the applicant alongside with the risk management and commercial consideration, such as a long-standing relationship with the bank or the assets with the bank, any unique product features and microeconomic condition when assessing credit facility applications.
For the MAS regulations, for example, for the housing loan, banks need to apply for the total debt servicing ratio on the mortgage, which is we call it TDSR. So this part does not cover by the credit score. As well as for the unsecured lending, say for example, the balance to income ratio, and we call it BTI. This is also not covered by the credit score. So from that perspective, banks also need to overlay by using other kind of sources to perfect their kind of a credit approval process.
Since your credit score plays a big part in determining whether a bank gives you a loan, how can you improve it? For this, it helps to understand the factors that affect it.
An individual credit score is derived mainly from the past credit information such as their debt repayment behavior, the overdue balance, and the available active account that is in their credit profile, and also the number of new applications. There is no fast-track way to build or to repair the damaged credit reputation. It takes a lot of consistent good repayment records over a period of time and rebuild good credit reputation. Consumers should actually spend their means within their means and strive to maintain a good credit reputation through responsible use of credit and maintain a good repayment history.
You have to make sure you build your habits so that you can pay back the loans on time. The things that impact credit scores are particularly not paying back loans in a timely manner, missing payments, for example, applying for too many loans in a very short period of time. All of these actually impact the amount of the credit score that you will have. So if the credit score is bad or average, then of course for bigger ticket loans, banks will be, or financial institutions will be unwilling to give loans. So this is something that we have to keep in mind. But having said that, there are some cases where credit scores might be checked, but they don't always report to the credit reporting agencies. So for example, in BNPL or the buy now, pay later type of schemes, which are shorter term without any explicit interest that is added to it. So you pay back in installments. The problem is that if you take too many of them, you still have to pay back the principal. And that might actually make it difficult for you to keep up with your finances.
Given how important this 4-digit number is, here's one way to be savvy about your credit score.
You should always check with the credit reporting agencies to find out if there's some mistakes in those credit scores that are already calculated, because there could be something that there should have been taken out that might not have been taken out.
And the one thing you should not do? CBS says, don't apply for too many credit facilities, like credit cards, within a short time.